Good morning, guys. Welcome back to the Accumulation Zone daily live stream. Today I decided to start streaming a little bit earlier because we have NFP news coming in a couple of minutes. Right now it's 1:12, so according to New York local time, 8:12 something. So we still have like 18 minutes left until then. So far, really this morning during the London session, we didn't get much action or any action at all. Let me make sure the YouTube live stream is running. Yeah, it's closed. There we go. So we're streaming live. Good morning, guys. Let's wait for a few people to join. In the meantime, I'm just gonna be watching the charts here, doing some analysis, cleaning up some stuff. NQ. Bup. We have 2 people watching. I don't know. It doesn't show me. Let's put the stream over here. Check our Discord. I don't know, maybe most traders just simply avoid NFP news. We will see. I will still keep streaming. I'm in front of the charts. I might as well stream. Good morning, good afternoon, or good evening, depending on where you are watching from. Gonna be watching the NFP news mainly on ES and NQ. The charts are empty right now. We are looking at the ICT all-in-one indicator. If we add that to the chart, we see our entire layout is already added to the chart. Previous week's high, previous week's low. There's a link in the description box below to the ICT all-in-one indicator. New day opening gap. If we turn that on, you can see that most of the time we just spend time consolidating around this specific level. We're also right now playing with the midnight level right here on ES. We have SMT divergence between ES and NQ. Middle center. So that's the new day opening gap. And that's all. Now, basically, we've been below it, we've been above it, we're back below it. Now we're almost back above it. So yeah, really just nothing. Maybe some Asia session scalps. Really nothing clean for the London session. We also didn't trade it on the accumulation zone. The only thing I pointed out earlier this morning is if I open up the Discord, good morning, and we go over to the VIP section here. I was chatting with Ryan this morning. Yes, set 5-minute time frame, 1 hour time frame. I did some bit of a markup just to point out how bullish this week has been overall. Every day took out the previous day's high. The daily time frame update, we're above the 50%. We have an inversion fair value gap on a daily, and we'll be sitting back until the London Open. I mentioned Asia sell side being the draw on liquidity. And I pointed out that we could potentially have seen a 15-minute market structure shift right here once we formed a high, a higher low, and a higher high. We took Asia buy side really right here. So we took that buy side liquidity right at 215. It's not really the London kill zone, at least not this week, because of the daylight savings time change over in America, in the UK and Europe. So we're gonna change the London kill zone settings from 2 till 5. We're still holding around the midnight level, so that's at least something. But on the 15-minute time frame, what we saw is that we broke this most recent higher low. We closed below it right here, leaving behind a bearish inefficiency. It took a long time for it to take out the Asia session equal lows right here, but eventually we delivered from our bearish inefficiency up here, paired with the midnight level, into sell side liquidity below us. Acceptable, I didn't take it. I didn't like how narrow the range was. Not even 5 points from the entry all the way down to the sell side liquidity. I want at least 5 points, but that's just a personal thing. Let's turn off the new day opening gap. We do not need that. We have our daily opening right here at 4327.5. News coming in 10 minutes. So we took out Asia buy side. We took out Asia sell side. Well, the question is, what do we have remaining? Buy side liquidity right here at 4335. The SMT divergence, London sell side liquidity. Bottom right. That's a little bit small. Let's make it 12. We had the daily opening wick right here, forming the low at 4326. So really, the opening range today wasn't really spectacular. Only 9 points. Asia, London, very tight. We could have anticipated that ahead of the NFP news schedule. We do not trade NFP news. Maybe afterwards, we will see. So the 15-minute bearish fair value gap right here that delivered into sell side is now holding support, because now we're closing above it. I'm gonna be keeping an eye on that inversion fair value gap. And yeah, like said, really, let's label this as London buy side liquidity. Top, right, and text size 12. If we take a look at NQ over here on our second chart and turn on the ICT All-in-One indicator, we can see that we're around this red line, which represents our previous week's high. Previous week high and low. If we zoom out here, this will make more sense. So same for ES. We took out the previous day's high on... Go away. What's that? There we go. We had a pretty bullish week so far. Also on Nasdaq, we took out last week Tuesday's high, which is represented by this red line as our previous week's high. Right now, yeah, similar to ES, but a little bit different. Here during Asia, or after the Asian session, we took out the high. During London, we managed to take out the low. We did the exact same thing over here on ES. We took out the high, we took out the low during London. So that's all fine. But here comes the tiny little difference. We took out the sell side liquidity pool, the London sell side, right here at 7 AM. So with the new hourly candle. Here on ES we did not. That's why we currently have this SMT divergence, which, yeah, I don't know, confirmed to me at least that we're going to see London buy side being taken. On NQ, we've already done that, so we already took that current high of the day. On NQ, this pattern really becomes more obvious now. We started the day. Let's only regard the kill zones. We form a high, we form a low, we form a higher low. a higher high. We take out sell side, we pull back and form a higher high. Hope that makes sense. So here we form a high, a higher low, and a higher high. What do we do afterwards? We reverse. We take out the opposite sell side or liquidity. We pull back, same way as we did here. Make a lower low, same way as we took out the Asia buy side right here. So after making a higher low, taking out buy side, we made a lower high, taking out sell side. And then what did we do after we took that buy side right here? We reversed to the opposite liquidity pool right here. Same thing happened right here on NQ. So yeah, that's just that typical seek and destroy pattern, where once we take one buy side liquidity pool, we expect sell side to be taken. After sell side has been taken, we expect buy side to be taken, and this could go on until the important news driver event, which is going to drop in 6 minutes roughly, is going to be released. So on NQ, that's what we're working with. We have our power of 3 daily candle. We are also holding above the midnight level. Right here, this dashed line is the midnight level. This red line is our previous week's high. We have a valid market structure shift confirmed on NQ, but be aware that we have NFP news. We could see a quick pump into the previous day's high, but really it's, in my opinion at least, not worth the risk, because we could get a simple on that next candle opens up, big wick to stop out all the longs that are in the market. Maybe something like this, and then continue higher. And it's not worth getting, slipped here or stopped out on this big stop hunt before we maybe take out the previous day's high one more time. Same if you're already positioned short, which I think is maybe less likely. But overall, keep in mind we had a already super bullish week. All eyes are on the stock market right now. Everyone wants to know what the NFP news event will look like, since we didn't have a interest rate hike on Wednesday when the federal funds rate has been presented. If we take a look at Forex Factory, we saw that the federal funds rate right here, if we look at the graph, stayed the same. They didn't increase. So pretty much starting 2022, we started this increase to the upside. During May over till June, we didn't increase, but from June over to July, we started increasing again. But so far, we've stayed flat at basically since July 2023. Let's turn off the forecast and only the actual. Yeah, we stayed flat. And it's very similar to what we saw last time after the February 27th. We've been increasing for a longer time, but also less aggressively. If we compare 2017, 2018, 2019 to what we got during 2020, a much steeper increase in the interest rate compared to what we saw last bear market basically. Right now we're going flat, and afterwards we had the rate decrease. Could be a possible indication to what we get in the future. Here we stayed flat for 1, 2, 3, 4, 5 months before we decreased. We will see what's happening this cycle. And yeah, because we had a very bullish week on the stocks, and everyone is interested to see if I don't know, the bear market is over. They really want to see what's happening right here with the average hourly earnings and the non-farm employment change. It's coming in 3 minutes. Nice, we get the expansion here on ES. Where do we do it from? Our inversion fair value gap. Why do I use this specific fair value gap? It's pretty simple. I simply look for fair value gaps and inefficiencies that have been used before. And right here we already marked this out, a high, a higher low, and a higher high. We shifted structure, pulled back into a bearish fair value gap, and delivered into sell side, being the Asia low liquidity. Afterwards, we pulled back again, failed to make a lower low. Right here we have SMT divergence with NQ because NQ took out the low we were just talking about here on ES. Then reversed, closing above our old bearish fair value gap. Once we close above that, we would expect support from it. And do we have anything else lining up with this inversion fair value gap? Yes, which would be that New York midnight level. And we close right on it, so we keep holding support here on the 5 to deliver those equal highs right now. We didn't take out London buy side yet. In 2 minutes we will get the NFP news event drop. Let me open up the ICT all-in-one indicator and turn off the New York kill zone box. It's not relevant because it's still forming. Take a look at NQ. NQ already took the London buy side while ES didn't. Let's wait and see. Not gonna engage on anything here. Gut feeling wise, I would say we are more likely to go long than short. But yeah, it's NFP. We can't be sure of anything. Okay, we apparently just took London buy side. Gonna be watching it on a 5-minute time frame here, a 15-minute time frame here. Wanna see what this news event that's dropping in 1 minute will do with price. If you have any questions, feel free to ask me. For example, why I specifically chose the fair value gap that I have outlined on my chart, or anything else. So now we took London buy side. We still have that SMT divergence. And Q didn't see that push. Likely manipulation. 5-minute time frame, 15. Like I said, we're gonna watch it on a 15 to get a better picture. We have the previous day's high coming in at 4,340 basically. 10 seconds to go until news. Still playing around with that midnight level. Right now the daily candle is bullish. And there we go. Like anticipated, gut feeling wise, more likely to go long than short. But it wouldn't be the first NFP event, NFP news event where we see a pump to dump or a dump to pump. So we took out the previous day's high. We keep on rising on the stock index market. Once more, like we already talked about earlier, we took out the previous day's high. Where did we do it from? So even though we had NFP news, we saw how beautifully our ICT-Concepts work during live conditions. I pinpointed the fair value gap, which has been inverted. We used the midnight level as our support. We respect that perfectly here on the 15-minute time frame, and that's where we deliver into buy side from to. So let's look at it on a daily time frame. On a daily time frame, we have these inversion fair value gaps, and I just want to mark out daily liquidity. That's the entire purpose. All right, let's go back to the 15. Keep an eye on this daily buy side liquidity. Let's also take a look at the DXY. Duplicate tab. We don't need the ICT all-in-one indicator on the DXY. Let's take a look at it. So just as expected, we continued lower on the DXY, but I want to see what's happening on the daily time frame. Remove all the drawings. And sell side liquidity would for me really be that previous week's low. And then every daily low below that. Yeah, nice. We pretty much anticipated the NFP news event. Not worth taking a trade for reasons we stated before that. but that's pretty nice. Bullish value gap, we tap it and we continue with the move to the upside. But the news event is not over yet. We will see how the stock market opening at 9:30 a.m. will impact what we maybe can trade. Now that we have the NFP news behind us, we could be looking forward to maybe place a trade. We have our daily liquidity targets. Daily buy side. Okay, looks like I can't spell. Daily buy side liquidity and more daily buy side liquidity. We have the SMT divergence with NQ. We still didn't clear the London session sell side. At least on NQ we did. But yeah, we will see. We will see. Let's go back to the 15-minute. We had our inversion fair value gap. That's done. London sell side. SMT divergence with NQ at the lows. We're above our previous day's high. And yeah, that's about it. DXY keeps dropping lower. I'm gonna set an alert for the previous week's low. Just to know, once we take that liquidity, took the previous week's high, we're still at the high of the week, really. Let's look at the 4-hour time frame if we could maybe pin down some 4-hour liquidity. No, that lines up with our daily liquidity up here, I think. Should at least. I'm not sure where our drawings went. Where did they go? Where are the trend lines that we drew up on our daily time frame? We're on NQ. Sorry. We want to see that on ES. So let's go to the 4-hour time frame. Yep, that's our daily liquidity pool. We would have some more 4-hour stuff, so 4-hour liquidity above here. Oh yeah, I mean, pretty bullish. Pre-market. Let's see how that turns out when the market opens up. The DXY. Yeah, I think now everything is ready and engaging with price now. I mean, yeah, nah, not really. I mean, we now have a huge inefficiency, just like we would anticipate after the 8:30 news. We're not too far away from our daily buy-side liquidity pool, coming in at 4,366 and a half. So we got the expansion. Let's see what we will do with the continuation. I think most of the momentum could be gone with still 12 points to our next target. If we look on the daily time frame here on NQ, relatively speaking, ES. Let me hide the indicator here because that doesn't help us on the higher time frames. Daily buy side liquidity on NQ would come in right here. Right here. And right here. Because if you think about price being fractal, you would very likely see that all these highs on the daily are significant swing points on lower time frames. That's why I'm simply going to the daily time frame to map out all these levels. We could even use this one right here. And this one right here, every daily high is gonna be buy side liquidity. But the major buy side right now with the current range that we are in would be from this low to this high. Here on the daily time frame, we formed a low, equal lows actually. We took them, we pulled back, we continued lower. Now I don't know, it's fair to say that we're kind of overextended. We opened up this week with that new week opening gap right here. And we had Monday pushing, Tuesday pushing. So a consecutive array of higher highs and higher lows really. We made a higher high on Tuesday and a higher low. Higher high on Wednesday, higher low. Higher high on Thursday, higher low, and a higher high here now on Friday. So yeah, expecting some sort of a retracement into these inefficiencies here could be anticipated. We might only see that next week, but yeah, we have our buy side, sell side labeled. Market structure wise, we found a lower low, lower high, lower low, and this would be a new daily bullish market structure shift. Bring that down to the 15. We now have our daily buy side liquidity above us. We have the SMT divergence with ES. No, not respecting this fair value gap here on the 1 minute time frame, 5 minute time frame. Let's wait for that next 5 minute candle. Good morning, guys. If you have any questions, feel free to ask me here in the chat. Right now, I'm just doing some tape reading on ES basically. Right after the NFP news, we had the correct bias. We were looking bias in terms of gut feeling, so nothing really quantitative. We were talking about the seek and destroy ahead of the NFP news event. That's why we today avoided, or at least I avoided, the London session. We had a little setup right here, a little session scalp, where we shifted structure once we took out this low right here. So we formed a high, a low, a higher high. What did we do afterwards? We formed a lower low. So right here we had the break in structure. That should be pretty obvious. We closed below it. We left behind inefficiencies right here. There's a bearish fair value gap. We have the midnight level also above that, which would help it to act more as a resistance. And we continued lower into the liquidity pool, being Asia sell side, these two equal lows right here, coming in at 4327. We took that sell side, and once we took that, we immediately pulled back. Right here at 7 a.m., we left behind bullish SMT divergence, so this would be clue number 2. And really, I would look for important fair value gaps, and the way I define important fair value gaps are the ones that actually deliver price from a premium into deeper discounts below the liquidity pool. And this is the only real one we have here on the 15-minute time frame. And what did we exactly do with this fair value gap afterwards? Used to be bearish. Now we close above it. We close above the midnight level. And from there on, we kept holding support on this newly formed inversion fair value gap. We closed right on the midnight level, and we delivered into buy side from there. Very clean. That's why I had it outlined on the chart. We had a potential opportunity for 5 points. I really wouldn't have looked for more, especially on a NFP Friday. More than 5 points possible. Dirty Ryan, one of our VIP members this morning, actually took that short we were talking about right here with micros, 5-minute time frame secured once the Asia low has been taken. And I was also pointing out for all the VIP members, or the new VIP members, that I was looking for, where do we have it? Asia sell side is the current draw on liquidity, at 9:07. So right before, not right before, right when the kill zone started. 9:07, yeah, 3 a.m. New York local time, and then London opened up at 4 a.m. But really, during that London opening hour, we didn't see any momentum at all, and it's very typical for a NFP Friday, every first Friday of a new month. Consolidated here, if we go to a lower time frame, we would see that clearer, failed the 15-minute and continued lower, leaving us with the SMT divergence and the continuation higher of the inversion fair value gap. DXY is about to take out the previous week's low. Right here, I have my alert set. Let's look at the 1 minute time frame here on ES. Pulled back. I would wait for the first, for the 15-minute news candle to close before even considering anything, because this would start a new 15-minute cycle on the lower time frames. NQ is also pushing up. We're about to take out the low here on the DXY. And there we go. We just took out this low, or we tapped it. Now we took it out. Pretty bearish day so far here on the DXY. So all foreign currency pairs will likely look like this if they move to the upside. Like for example, Euro US. We have this inefficiency right here. And potential targets or lower targets for the DXY really would be, every daily low that we have put in place here from the left. Right here. Right here. And then we also have a daily inefficiency down here. We haven't used this one yet. And then more sell side below this low. We could measure the 50% of this wick. %, coming in right here. Orange, and let's make that a dashed line. 50% of the daily wick and a bullish fair value gap that kept on holding support while we've been in this uptrend on the DXY. DXY keeps on going lower. The 15-minute candle closed, and look how we opened up here. We opened up with a 15-minute bullish volume imbalance. So on the 5, we'd see that same volume imbalance. We filled the fair value gap. Well, yep, fair value gap or liquidity void. That might be a better word for it. Here on the 5-minute, open up with a new bullish volume imbalance. So, yeah, if we would see that continuation now, I wouldn't be too surprised. But, yeah, I don't know, if you enter up here, there's just so much room to the downside that you potentially have to cover. Would be a very high risk entry in my opinion. DXY continue to go lower. About to take out more daily sell side liquidity below all these daily lows. And what's really interesting, if we look at the DXY bigger picture, where did we start to see all this messing around after this very bullish rally? So we first of all took out these relative equal lows right here. So we took out the sell side liquidity, and afterwards we started this pullback, really, if you want to call it that, or rally to the upside. But where did it stop? Right at the 50% level. We hit the 50% of this PD array of the initial pullback. Then during July, we started to go back up with the US dollar. And once we hit that 50% level, right here, we started to go sideways. And now we also got rejected. And if we keep on looking at the daily time frame here on the DXY, I think we're now inside a daily bullish fair value gap. So we took out all the sell side. Let's take a look at it on the weekly time frame. Weekly time frame. So we can see that's no weekly liquidity, that's intraday liquidity. The next weekly objective would be down here. We took out the previous week's low. Here on the daily, we keep the chart like this. 50% of this wick, bullish fair value gap, daily, weekly sell side liquidity. After running out all these daily lows, let's see if ES makes the next push higher. We have daily buy side liquidity resting right here, and more daily buy side liquidity up higher. It's 8:45, so the new 15-minute cycle started. NQ pushing, DXY continuing lower. Did anyone take some trades, some NFP trades ahead of the news event? Are many people doing that? I'm wondering. So we see that push, just like anticipated. We tap the fair value gap. We open up with a bullish 5-15-minute volume imbalance. We retest the closing price, and from here on we deliver higher and almost already hit 5 points. 10 points to our daily buy side liquidity target, which could be likely. The XY is still continuing to go lower. And that's the way you do tape reading. You listen to the story that fair value gaps tell you, the same way as we did right here on the 15-minute time frame to frame the long for the NFP news event. We've got a few messages on Discord. More can it show two instead of one candle showing right now at your screen? I will probably figure it out for having everything together. Thanks in advance. By the way, are you German? Heard something about being Germany. Yeah, I'm German. Mahlzeit. Yes, you can display more than one candle with the power of 3 indicator right here. That's part of the ICT all-in-one. All you have to do is you scroll down into the power of 3 settings, where we have them right here, power of 3. You select the time frame, and let's say, for example, you want to see more than one. You can display actually up to 10 candles. Let's say you want to see the most recent 2 hourly candles, so let's do 3 or 4. Give it a little bit of time to load. There we go. So those were the 4 most recent hourly candles. Previous hour closing above the midnight, and the current hour, which is obviously that NFP hour with the strong expansion to the upside. If we would measure that out, that would be a total of 31 points. I was really tempted on longing, but consistency is more important than making quick profits, in my opinion. So yeah, then engage. Daily. NQ retracing, leaving behind equal highs, while here on ES we clearly see we made higher highs and we're a little bit stronger. The DXY rejected from the bullish fair value gap and all these lows. What else? Did you get the link for the indicator setup guide? Once you sign up on WAP, you should be getting a little link to a unlisted YouTube video So once you sign up here, you should get that website link, and then you should land on the accumulation zone YouTube channel on a specific video. If I go to customize channel, and 1 second, and we go over to the content. Right here, there's a unlisted video, the ICT All-in-One Indicator Setup Guide. And here I pretty much talk about every single setting that's included with the ICT All-in-One Hey guys, and welcome to this point in time, and how you specifically modify the kill zone boxes, because the only thing you really have to worry about is the time and the timing, because let's say you, for example, trade Euro US dollar on Oanda on TradingView, or you simply use it as your analysis chart. Every broker here on TradingView has different GMT offsets, so the power of 3 or overall the ICT All-in-One indicator comes out right with the default settings to perfectly work on future charts. So right here, if you go over to futures, for everything that's from the broker or exchange CME, and whatever you select with CME as broker, everything is set up correctly. But if you like happen to trade CFDs with Oanda, for example, you have to modify every setting that has a time variable, like for example the daily divider, the kill zone boxes, the backgrounds, but everything else still works as usual. Let's look at the 1 minute time frame. Yeah, nothing you want to trade or engage, not even on the paper trading account. Almost about to pass my Apex 50k paper trading account. That's usually the account that I go to if I want to continue trading after already having a winning trade. Really helps me staying more consistent. This morning I also found something pretty nice on Twitter. If you really look at it, over the entire year, we roughly get around 250 trading days, and making 200 bucks per day equals to 50k a year. 400 bucks a day makes sense. We double it to 100k a year. And sometimes, like, happens to me too, you trade on your challenge and you've been at it for a couple of weeks and you just really, come on, I want to get this challenge over and done with. I'm so sick of trading on this demo challenge account without having the ability to get a payout. Then you're just trying to rush the process instead of simply sticking to your rules. And yeah, it really helps me being more consistent, having this in the back of my mind. You don't have to win the war in a single day, pass the account, blah blah blah. It's a marathon, like many traders always refer to. Yeah, MetaTrader 8-cap stuff. Every broker has their own GMT settings, also on TradingView, unfortunately. So if you trade with CFD charts and you turn on the ICT All-in-One indicator, you have to do a little bit of work, but once you've done that, you simply save it as your indicator template and you're pretty much done. For example, in the indicator setup guide, right here that I showed earlier, I did it for the Blackboard chart. And right here, let's load the indicator up and zoom out a little bit. You can see it's still working like the way we want it to work on the futures chart. You just have to modify the timing settings right here. And especially with Forex charts, they don't have, or CFD charts, they usually don't have the new day or new week opening gap, because they're CFDs. You would only see the new day, new week opening gap if you trade the actual FX futures contract. But yeah, just to show that it also works on CFD charts as well. all you have to do is modify the settings a little bit. Let's go back to our DXY chart. There we go. Okay, ES is retracing now as well. NQ didn't make this higher high, so we actually left behind equal highs here. Go to the 1 minute time frame. We still have that daily buy side at 4366, but I really wouldn't expect anything here. Let's wait. First of all, wait for the next hour to close here at 9 a.m. and then we get the New York Open over here at 9:30. I think we also have some more news coming up. Yep, 10 a.m. we have the ISM Services PMI. Let's take a look at what this is. The Institute for Supply Management, leaving a level of a diffusion index based on survey pattern. Interesting. So just be aware of that if you enter trades before after 9:30, and then at 10 a.m. we get the news. Let's take a look at the last NFP event. I know conditions are very much different. We're now more bullish. Last time we very likely were very bearish, but I think it's worth taking a look. 15-minute time frame. Let's go over to November the 1st. Now we have to go back a little bit. Let's hide the indicator. Maybe the chart's loading up quicker then. We have to go back to October. There we go. October, first Friday during October. Right here. So initially, we had a very similar situation during the last NFP event. We took out major sell-side liquidity. That's the 8:30 candle right here that took out the sell side. And then later on, so for until the New York Open basically, or even after the New York Open, this is the New York Open, we initially consolidated for 15, 30, 45 minutes until we saw the explosive reversal to the upside, while the initial NFP move was to the downside. Right here we took the sell side, I remember this. Took the sell side, New York Open came in, and we got the reversal without really any higher time or lower time frame entry, unless you just jump in with price and chase it. I don't like to do that, but I know some traders do. And now we could maybe see the opposite. That's why we will wait until the New York Open to see how the stock market is reacting to the apparently bullish, at least for stocks, NFP news. Pre-market, all stocks are very likely up, so we want to see what the market open will do, and that's happening at 9:30. That's 30 minutes from now. I will likely take a little break in between, because there's no point in sitting here and simply watching the charts, but I'd be a fan of a pump and dump scenario. So similar to what we saw during October NFP news, we had the dump, and now I would be looking for the move back into our entire weekly range, because if we take a look at our current week, we got the low in right here from Monday, and Monday very, very rarely forms the low of the week unless we have a super bullish or super bearish week. Right now, this is our weekly range. 50% would line up with our previous day's low. Of course, it's a big move. It's more than almost 100 points we will see if we can get towards that. Yesterday we moved a total of 77 points. On Tuesday, well, let's measure that entire range actually. 218 points within 1 week. If you look at our previous week, more bearish, but still pretty significantly. 170 points to the downside. Around the bottom. Kind of looks like a market maker buy model. But still, a retracement back into the range is healthy, even in a uptrend. We cannot expect price to simply continue higher without ever stopping out any of the longs. And looking for longs today, we will see. I don't really think that I would engage on my take profit trader account if we get longs, really. Take profit trader account yesterday after the live stream, I took a little long on NQ. That's why it's almost at the take profit target, so I'm only $750 away from that. I'm in no rush because, like I said, consistency is more important than quick profits. Otherwise, yeah, could have jumped in on the NFP long. We had it outlined on the chart half an hour before the NFP news event came out. But here on Discord, if we take a look at the VIP chat, nah, I think I posted it in general yesterday. Yeah, right here, this was the NQ long. I took it mainly because ES didn't have this, significant pullback. 10 a.m. we took it out. We had massive SMT divergence with ES, and NQ actually being the weaker one led me to enter on this bullish inefficiency right here, targeting those two relative equal highs for a close above the previous week's high. Played out really well, very quickly. 5-minute time frame. We retested the VWAP. We didn't do that on ES. We only, I don't know, I think ES never actually took out the liquidity right here around 8:30, while NQ continued lower and lower and lower. So we were actually in a short yesterday on ES, on the live stream, a 1-minute 2022 model, but it didn't play out and it continued to take the buy side. I ended the stream, jumped over to NQ, and I saw the opportunity. I wish I would have still been on the live, but I already ended it. And yeah, I don't know, still a higher risk entry because it's NQ, entered with one mini contract right here on this tiny little inefficiency, and that's exactly where we bounce from to target these relative equal highs, which put the account back up in profit. Take Profit Trader also has their discount still going on. Let me log in here quickly. It still has, let me log out here, the 40% off for life and no pro account fees. So most of the traders, they are either with some of them are with Topstep. I don't really like Topstep. I don't think it's the best futures funding firm out there right now. Apex is the best futures funding firm to get started with because 90% off. Who's offering you a 90% off discount? But really, if you take a closer look at what's behind it, it makes more sense. They sell a lot of cheap challenges. People treat it like a scratching ticket or a lottery ticket. They take one big trade and most of them fail because they have the intraday trailing drawdown right here, which is being calculated live. So if you're $1,000 in profit, that's going to be used as your highest account balance, and then it's always $2,500 from your highest account balance where your stop loss is. And then once you pass the funded account, you also have to pay a $150 fee to get your pro account. That's very similar to all the other future funding firms except Trade Day. But Take Profit Trader, really cool firm, I like them. they have a 40% off discount for live, and you don't have to pay pro account fees. So once you get funded, you do not have to pay these $150. And why I'm also excited to get funded with them, if I continue to stick to the rules and make the last $750, is that on my first trading day on the funded account, on the pro account, if I make profit, I can withdraw that profit. And if I make profit after that day, I can withdraw it immediately again. With Apex Trader funding, you first of all have to get above a specific threshold. For a 50K account, that's, I believe, $2,600. And then you can request a payout bi-weekly, so twice per month within a specific timing window. While here with Take Profit Trader, immediate. Once you make profit, you can cash it out. So I really like that. And you can also reset your funded account. It's a little bit more expensive, but really if you consider that you can, once you reset it, you make profit and you can immediately withdraw it without any stupid restrictions, I think it's a fair price, because you still get to trade a 50K simulated account and withdraw immediately. That's pretty cool. And you still get a 40% discount, and you don't have to pay $150 after you get funded. So there's a link in the description box below here as well for in the live stream. Where's the live stream? And yeah, if you want to support the stream, you can also use that affiliate link. All right, let's take a look at ES here. ES is now pulling back. INQ doing the same thing. DXY also pulling back after hitting this daily bullish fair value gap, taking out this daily sell side below all these lows. Take a look at the Discord. Yep, welcome to the club, Ease. Very, been on that same journey. I've been with CFD prop firms. I am still funded with my Forex funds, even though they're frozen right now. Maybe they come back, we will see. But now, even before that, it's always a struggle with those spreads and the commissions or the slippage. The slippage with these CFD prop firms, it's insane. Like, I don't know, I've tried funding pips recently ahead of the news, and I took a long position on Euro US dollar based on a strategy that I'm testing right now. And I executed on my futures account and on my CFD account right here on EU. Let's say very similar to what we saw right here during the NFP news event. Imagine I was short, let's say from right here. I've been short. I had my stop loss at the previous day's high on both the Euro US dollar futures chart and the Euro US dollar Black Bull chart, a CFD broker. So what happened once I got stopped out with the news candle? It was not NFP news. It was I don't even remember. I think unemployment claims. So with the futures, on the futures Apex account, I have been stopped exactly where my stop loss has been set. So with futures, you do not really have to worry about slippage. Maybe on NFP it's different. I would have to test that. I should have tested that today. It's only $15 for a 50K account. That's pretty cool. But yeah, the main point I'm wanting to make is that on the CFD prop firm, I risked 1%. I had my stop loss at the exact same level, but I got stopped out somewhere up here. And instead of losing 1%, I actually ended up losing 2%. And then they say, oh yeah, but you shouldn't trade ahead of news, blah, blah, blah. It's just, I don't even know what to call it. They play with you. And with futures, I was really surprised. I checked the futures chart. I looking, okay, how much did I lose? Okay, exactly what I risked. How cool is that? And yeah, zero spread. It's incredible. I really like it, especially if you already trade ICT. I do not think that Euro US dollar or pound US dollar is more precise using ICT concepts in regards to fair value gaps and all this other stuff compared to a index futures chart. NQ would be the wild version. So if you really like to, I don't know, get aggressive and quick profits, quick losses, I don't know, NQ would be more the asset for you. For me, it's really yes. It's calm, very precise, respects these levels perfectly, and it's also much easier for it to respect it because it has a lower price, less decimals. If we compare it to NQ, we're sitting at 4332, 4 decimals before the 0, and on NQ we're sitting, let's say, roughly at 15,000, which is 5 decimals before the next 0 after the comma. And yeah, this makes it much harder for NQ to, let's say, specifically hold support on this price level because you have more decimals. On ES, we have that midnight price level and we hold and close on this level perfectly to the tick. What more could you want? Like, you enter right here, boom, done. Inversion fair value gap that initially was a bearish fair value gap to deliver into Asia sell side, paired with bullish SMT divergence, paired with the midnight level, took out the London buy side and delivered into the previous day's high and wherever we're at right now. That's why I made the switch over to futures. It's a difference. I made a few videos on my YouTube channel regarding the difference between future and regular CFD prop firms. But yeah, I think it's worth it making a switch. The only real difference is the smaller drawdown. I mean, with a take profit trade account, if we take it as an example, you can only, you have a profit target of $3,000, which is relatively to the account balance 6%, and a 4.5%. Yeah, a 4.5% end of day trailing drawdown. It's always trailing with future funding firms. Apex, for example, has a live trailing drawdown, which is not cool, but I don't know, if you don't gamble and do not overtrade, it's really not an issue. If you take your one trade during London and one trade during New York, you really shouldn't have any issues with the intraday calculated trailing drawdown. And you also have to say that all of these future funded accounts, they're always a one-step challenge. There's no second step involved in it. And I think it's pretty cool to have that. But yeah, the downside obviously would be the intraday or end of day trailing drawdown compared to some of the CFD firms that have a fixed static drawdown coming in at 10% with a profit target of most of the time 8%, and then they always have that second stage where you have to hit another 5 or 6% profit target before then getting funded and requesting your first payout. Yes, it's still holding up relatively strong. It is 9:15 now, so we have 15 minutes until the New York Open. 2 dojis right here after that 15-minute NFP news candle. We hit the 15-minute bullish fair value gap. We're above the daily previous day's high. We have daily buy side liquidity right here at 4366 still. Daily candle as of right now is bullish. We will see if it remains this way. And I think until the New York Open, I'm gonna take a Can you give me some advice on trade managers or EAs? I use an EA in MetaTrader that calculates my position size and does the stop loss, taking profit inputs with my configurations. Pretty easy to use. Is there something like that on future trading? For example, with take profit. Alright, I get it. I also use, when I traded with my Forex funds back in the days, a couple months ago, I also had a trade manager on MetaTrader, but the beautiful thing is if you trade, let's see, let me give you an example. Let me log into my paper trading account. If you sign up with Take Profit Trader or Apex, whatever, the only thing you have to make sure of is that you select, depending on which platform you want to trade with, they always have two data feeds. You can either choose the CQG data feed and you can trade on NinjaTrader or TradeOvate or TradingView. So you can actually trade on the TradingView chart. That's what I'm doing. So I always go for the CQG data feed and then I head over to TradeOvate, get my login details, and once I have them, all you have to do is log into your broker right here, TradeOvate. I have that one as my favorite one, and you can trade your futures funded account directly here on your TradingView chart without having to go on MT5, which really is annoying. It's super crappy, super old. I don't like it. And the charting works really suck. You always have to have TradingView open if you do scalping. It's really not the ideal thing to do. So let's say we are on a 1 minute time frame and we are trading our Take Profit Trader, Apex, Topstep, whatever funded account, and we want to enter into a long position. Let's say if we get back to this price level, we want to enter long, we place our stop loss right here, and I'm using the regular projection tool. Our target is going to be this high, and all you have to do then is do right click, create limit order, and then you basically get your risk manager right here. If you want to say you want to risk 1%, you can risk 1%. Everything is calculated for you. The only difference is that you can only enter with full contracts. So with full contracts, you can't go with decimals like with your CFD broker. You can enter with 4.1, 4.05 lots, whatever you want. With futures, you cannot do that. And yeah, then you simply hit buy. You're filled on the trade. Your risk management is done for you. If we get down to our stop loss, we lose 1%. You could modify that now to a 1.5 risk to reward, and you would make 1.55 times what you would lose compared to what you lose. And yeah, other than that, little introduction into futures trading. There are two main contracts, which would be the mini contract and the micro contract. So if you type in the futures short version for that would be ES for the mini contract or MES for the micro contract. The main difference between the two is that if you hit trade, you can see that per tick. So from our entry, it's always measured in ticks. One tick, 0.25 cents basically on the price here for the S&P 500 index refers to, if we go in with one contract, $12.5 US. So if you go long here with one contract, you're up 12.5, you're up 25, you're up 37.5, and 4 points nets you $50. And if you do that on a mini contract, let's head over to the MES, the micro contract, sorry. You actually only end up risking 10 times less. So if you risk one micro contract, you can, especially on smaller accounts, you can define your risk a lot better because you only risk $1.25. So if you would enter right here with one micro contract, you can see that. You can modify your stop loss, your take profit target, or if you want to use the risk management tool, place your stop loss below this low, take profit above this high, you do a right click, create a limit order. Let's hide this here quickly, create limit order. And then you can set the risk. So let's say we want to risk 1%. It will tell us, okay, we have to enter with 76 micro contracts to risk $1,140 if we want to decrease that. Let's say to a fixed dollar risk and only want to risk $500, not 5,000. It's telling us to use still 76, 475. Should be fine, yeah. Risk 0.45, 75 micro contracts. And like that, the order is set, same way as you would do it with your risk manager on an MT5. And you can, you have the luxury of doing it all on TradingView, where you very likely do most of your analysis anyway. ES set for the S&P 500 futures contract. So for smaller accounts, let's say less than 50K, and 50K really, it's more appropriate, especially during the New York session, to use micros. And yeah, then you simply use MES, you do your risk management, and yeah, pretty much good from there. Hope that answered your question or a few questions. Yeah, just call me Matt. Matt. I really appreciate that. If you want, you can also leave a review on WAP. It would really help the little site here. I think I've already got 2 reviews. So yeah, I don't know. For me, it was I really hated spread, like getting stopped out with spread. There's nothing worse, getting stopped out with spread or slippage or manipulated or B-booked, whatever, and then seeing price still continued in your favor. It doesn't work anymore. All right, thanks very much. I will make sure I fix that. We're running in profit on our paper trade. And if I want to exit with partials, I would simply click on the plus button right here and I sell 1 contract, then it's going to deduct. That's always a netting account with MT4 and MT5 and future prop firms, CFD prop firms. You always get access to hedging accounts where you can go long and short at the same time. You cannot do that with futures. It's always adding up all your positions. So if you go long, you add to your trade basically, and your entry is getting averaged in. So if you enter here, 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 it still shows you only entered 1 time. So now we took our first partial out of our net 3 or 4 long positions. We took 1 off now with a sell limit order. We could set another sell limit because we have these equal highs here now to get out of our position. Or once we make a higher high. So let's do it like this. If we make a higher high, we take another partial. And you would do that simply by setting a sell limit for the long scenario. So now we see we deducted 1 long contract with our next sell limit. And now we would have our final TP at this daily buy side target where we would get out. And if we want to take another partial, we simply set another sell limit below our main target. This is our main target, our main stop loss. We could trail that. If we want to do a partial exit, we could also simply place a sell stop right here, because to get out of our long below it, we need to sell. So we need to sell a sell stop order to get out of 1 of our 4 contracts. If let's say we want to do a break even or a partial exit at break even, we sell 1 right on our entry, and yeah, we're pretty much done. Very easy to get into. Doesn't take a long time, and then you're used to trading on TradingView, which I really think is much better than MT5. What is the calculated daily drawdown for Apex 50K accounts? Justus, that's $2,500. So basically 5% of your equity. So let's say, let's leave this on here. Let's say intraday, you start out at, hang on, you can't do that. This is your main balance, 50K, and here's your profit target, 53. And let's say here you're halfway there. You start at 50 and you're in a trade. So this is your first trade. And you end up getting, let's say, towards 50%. You made $1,500 profit, but you're not securing them. And right now, your intraday trading drawdown, while your unrealized profit is moving up, your intraday trading drawdown, which is $2,500 away from current price, is already moving up with you. So if you do not take profit basically, and your trade goes back to break even, you always have to watch out for this intraday trading drawdown, because yeah, with your unrealized profits moving up, let's say 2,500, and all these 2,500, you don't realize them because you really want to hit your profit target on your first trade, and then the trade comes back down from your balance right here, unrealized balance, for $2,500 profit, all the way back to break even, yeah, which would result in a bloat account. You wouldn't have lost that challenge. Hope that made sense. Apex is being calculated intraday, while Topstep, trade day, and take profit trader is being calculated at the end of the trading day. So then it doesn't matter if you're up and you go back to break even, your trading drawdown is still $2,000 away from where you started for that specific trading day. And if you secure profits, let's say you did something like this, you made profit, now your intraday trading drawdown is always $2,000 away from your account balance heading into the new day. What's the time? Looks like it's 9:30 already. Pretty volatile here. Let's see, NQ didn't take out the high yet, so we can see that we have even more SMT divergence. We have SMT divergence already between those two highs and above this one right here. Let's get out of these silly example trades. SMT divergence at the high. New York is opening up. Let's go to my paper trading Apex 50K. We have daily buy side above us, which really should be the next round liquidity. 9:30. So New York opened up. Let's take a look at our regular trading hours opening gap by using the ICT all-in-one indicator. And in a couple of seconds, we should see a pink box or purple box somewhere below us. Because there's so many indicators in this one, sometimes it happens that it's timing out. I'm working on it. It's still a alpha version of the final product. Interesting. So right here, you see what happened. We had this unfilled volume imbalance. We have a gap to the downside. And we filled that here to the tick. They always get filled. So if you see these volume imbalances to the downside, where we do not see the new candle retesting this closing price or simply filling in this gap, eventually we will gonna get back to that level. And we just repriced it in and immediately rejected from that volume imbalance. Let's take a look at NQ. NQ still didn't take out these equal highs, but it's also pushing to the upside. Still have that SMT divergence, but really I would be looking for a 5-minute market structure shift. So we can see the new day opening gap. If we would switch over to the regular trading hours, looks like this. But we do not have to switch over. We can simply get the illustration of the regular trading hour to electronic trading hours opening gap. So from 4:30 p.m. over till the next market open, New York market open at 9:30, we have this gap here with this pink or purple box. But now that we have it on our chart, we know it's there, we know where it ends. If we want to see it again, let's say if we get into a short and let's say we target 50% of that, we simply turn it back on. But right now there's really no need for it. So I simply head over to the control panel and turn it off. I want to see the VWAP though and my standard deviations for the S here to see which one we have already hit. And Q Also made a higher high now, so that's done. The XY is pushing lower. Let's see if we hit our daily buy side. In terms of standard deviations, we already hit the positive, well, we're about to hit the positive 1. That's lining up with the daily buy side. Positive 1.5 is usually what we see on a NFP day or CPI day. These standard deviations are based on 20 years of historical data. So if you look at the daily range on the S&P 500, the futures contract at least, you can pull that data from the internet, and I did that, and simply looked at the point range of the S&P 500 futures contract over the last 20 years, put them all into an Excel file and created an average, and this is what these standard deviations are based on. And you do see reversals at these areas. If I go down to the settings at the very bottom, you can show the history. Let's see if we find an example yesterday or maybe this week. That would be pretty cool. We hit the positive 1.5 and we get rejected. So what you would want to see at these standard deviations is consolidation and a lower time frame 2022 model. Here we got a perfect one. So right here we had the opening, positive 0.5, positive 1 deviation. We got our 1 minute market structure shift up here and continued back down to the 0.5. Just a confluence, of course. I wouldn't enter based on these areas blindly. But once we hit those levels and we do not simply ignore them, cutting through them, then they're always a good little helper. Right here we hit the -1 standard deviation. And what do we do from here? Expand throughout the new week. That's what I'm using them for, but you don't have to have them on your chart 24/7. Especially if they line up with sell side, buy side liquidity. NQ pushing up, the DXY is still continuing lower. Go back to our 1 minute time frame. We've made a higher high. We're now inside a bullish fair value gap right here on ES. We still have our daily buy side target, which would be right here. Forming higher highs and higher lows. If we get a market structure shift right here, I wouldn't take that short, to be honest. I would like to see that daily buy side being hit. NQ rejecting. Let's see if we have any questions on Discord. From the Chicago Mercantile Exchange, so basically from the CME broker, you can pull that and put it in that Excel file. So from the actual broker, not from some shady person on the internet. Are there only 20 years free available, or some other conferences with that number? Now, only 20 years are available, I think, for free. That's at least what I found immediately on their website. Pivots. Just go to CME and look for historical data. I can pull up that website, but I'm not going to do it on the stream right now. I want to see how price is behaving now that 9:30 opened up. But we can talk about more about that later. And Q pushing. So the only thing that I would consider taking on my TPT account being at the high of the day, high of the week, keeping in mind that you want to sell high and buy back lower, or buy low and sell back at a more expensive price. It doesn't make sense to me to buy at the high of the week, high of the day. And anyway, Fridays for me personally are more about capital preservation than generation. Yesterday we talked a lot about making money is easy with trading, but holding on to money or holding on to our profits most of the time is a little bit harder than actually, not a little bit, hell a lot more harder than making the profits, because you made your profit, you kind of feel invincible, you take another trade because you want to make more, you don't really know what's enough. being greedy, driven by our emotions. We take another trade, we lose that, we get back to break even, and we feel like, man, I already could have closed the day, left my charts with 200 bucks in profit, but I didn't because I didn't listen to my rules. And yeah, what did you end up doing? Or what are you likely going to do now? You're not going to stop here because you could have already secured that profit, but you gambled it away or you gave it away. So now you're sitting still in front of your charts, trying or forcing profits again, and likely with a much worse setup than on your first trade that you took. And you end up losing again. Now you're even in drawdown, away from break even. Yeah, you want to get out of that drawdown. You take more and more trades. That's at least what's worked for me to stop over trading. Is, I don't know, it's really no rocket science to stop trading after your first trade. And especially if your first trade has been a winning trade, stop trading. If your first trade has been a losing trade, it's really also wise to stop after that, but obviously much harder. Good morning, Fate TV. Where was I? Yeah, simply overtrading kills you. Let's see if we can hit that daily buy side target. And Q is already kind of rejecting here. So we made that push. But it's still the higher prices here on NQ. So there is SMT divergence. 932, 936, 932. So if we happen to take out this buy side with one last push to the upside, we have bearish SMT divergence. If we get that followed by a market structure shift, I would take the short on the TPT account for this Friday. I have two Apex accounts, but I already took some micro trades on them because I already passed them. I already hit the profit target on them. Already up $3,000 on this account. And I still need a couple more trading days. You need 7 minimum trading days with Apex to get funded. I'm just adding a couple more to the list. Doing some micro executions. So the only one I'm interested trading in today after NFP news would be the take profit trade account, but only if I see external liquidity being taken at the high of the week, high of the day, for a quick 5 or 10 point scalp into sell side liquidity. Keeping an eye on both NQ and DS here. NQ took the 930 low. DXY, let's look at it on a 15. Could continue lower. Or potentially also pull back inside of this inefficiency, and that's exactly what I want to see to happen on ES and NQ. Getting some Discord messages. I'm gonna turn it off because some viewers complain about that annoying Discord. Good morning, Agent Smith. What's happening? Let's go. La 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 la. Nice to see you back in full action. Sometimes we simply need a break. And you breaking this little falling trend line. Okay, so we took that daily buy side liquidity after consolidating for a little bit right after the 930 open. We didn't really respect the bullish fair value gap here on the 1 minute time frame. So now after taking daily buy side, we will see if we continue to expand higher. The next daily buy side would come in pretty much with the double digits or double zero right here, 4,400. If we simply continue to push up higher, so be it, let the market do what it wants to do. I'm not gonna end up chasing price today. on this almost funded account, really. It's not worth it. I didn't sign up for a new Apex livestream account. The last one we've passed, I think, last week during the live stream as well. So now we're just pushing up higher. NQ didn't take out the high just yet. Keep an eye on that. So what I would like to see in order to take a trade is a strong displacement, not a slow displacement like we saw here on NQ, really, where we take several minutes in order to break a low. I want to see it happen within 2 or 3 candles max. Shift structure below this low, pull back and continue lower. That's the only thing I would engage on. La 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 la. Where's my water bottle? Right, there we go. Got our next expansion. If we look at market structure, look at the 5-minute first. We made a high, higher low, higher high. Had the tail structure on the 5-minute here. On the 1-minute, it's a lot easier. Higher high, higher low, higher high, higher low. Internal high, internal higher low. So really the market structure shift for me would be below this low, because that's what it looks like right now. High, higher low, higher high, higher low. Little bits of consolidation inside this range before the next move up higher. So if we displace below this, pull back, continue maybe towards the VWAP, I would take that. But until then, I'm not here to call a top. We could also simply use the inefficiencies that we just created, like for example this one right here for the continuation up higher. We left behind this tiny little bullish fair value gap. If momentum keeps being as bullish as it is right now, we tap the highest bullish fair value gap, simply continuing further to the upside. Same is happening on NQ. There's no SMT divergence going on right now. Here we have our first daily buy side liquidity level at 15,138. More being above. So just from this fair value gap, that's almost 5 points. Not bad. The DXY is continuing to drop. If we look at it on a daily time frame, you can see our clear picture. We've done the analysis already at the beginning of the stream when we looked at the live NFP news event drop. Next daily sell side liquidity would be all the way down here. We have this daily bullish value gap here for the DXY and the consequent encouragement of this daily wick for a potential return into the 830 inefficiency. We do not have to, but we could. But as long as, yes, making higher highs and higher lows, I'm not going to engage at the high of the week. All right, all right, all right. Bull market blues. Let me log into my paper trading account, then we could actually get some action in here. Won't be taking them on the TraderVate account. Nice little 5-point scalp here. Following the momentum. Is it yet? No, not yet. There, 5 points hit from the highest bullish fair value gap. And usually that's what we see when we are in a strong bullish move. We do not always get the retracements to the lowest fair value gap. We only tap the highest one, and then from there on we already continue up higher. We revisit these inefficiencies later. NQ also still pushing daily buy side liquidity here from the 19th of October. More above, we already drew orders in. I'd say we're pretty overextended. We started this week here on Monday, Tuesday, FOMC Wednesday, then on Thursday and Friday, massive upside expansion, but also due to the DXY dropping pretty significantly, especially yesterday and today with the 8:30 news, the FOMC news report, NFP news report. Still pushing. Let's keep an eye on it. We do not have any new bullish value gaps. We already extended above the daily buy side liquidity. Let's see. Let me take a look at if we have any daily fair value gaps or volume imbalances up here. Down to the settings. Daily volume imbalances are almost always new day opening gaps. And daily fair value gaps. Let's see. So the next volume imbalance on the daily would come in at 4,400, like we said, with that buy side target. I could see us hitting that, to be honest, if we simply continue with that bullish momentum and the DXY keeps on dropping. Could happen. It's only 25 points away from where we are at right now to continue this super bullish week. We could see a uptrend, okay, continuation uptrend during AM. Everyone being bullish and excited that stocks finally go back up again. Daily bearish fair value gap, nothing above us, right now at least. Nope. So let's turn it off again. Got all the information that we wanted. Standard deviations, I want to check them here quickly. We are above the 1 standard deviation. Market structure shift wise, it would be rather tough to claim a market structure shift. We could use this short-term low. We have a higher low to the left and higher low to the right. I don't really like using that because, I don't know, I treat this as one expansion move to the upside from our most recent higher low. Really no point being so picky with, okay, we made a higher low here and continued higher. No point. All right, so we're above the positive 1 standard deviation. New day opening gap. Yeah, that should be enough for now. It looks like I missed a potential continuation bullish momentum entry up here. For the paper trading account, I would have taken that. Like this. Same bullish fair value gap, just expecting them or anticipating them to hold. Stop loss below the short-term low. Target 5 points for a quick scalp. Same way as we would have done it right here. Quick 5 points, 250 bucks using a mini contract. NQ about to hit the daily buy side liquidity, also from where our highest 1 minute bullish value gap. Volume imbalance here on the 1 minute. What's the time? It's 9:52. Keep in mind that we have high impact news, PMI news at 10. And once again, from our highest bullish share value gap, we delivered into 5 points. If you do scalps like this, that will already be $500 in profit by only using one mini contract. Of course, they're higher risk because you're, I don't know, buying at the high of the day, but that's scalping. I don't do that on my funded accounts really. Sometimes I do. And I mean, yeah, we see it would have clearly worked here. But I prefer doing these things on when I'm not streaming at least, because that puts unnecessary pressure on me. For the streams, I only focus on my 2022 models. And actually, now we could really label a proper swing high. Let me get rid of all this stuff. So right here, if we take a look at market structure, even though it's just a 1 minute time frame, we found a high, a low, and a higher high. Higher high, displacement, pullback with news, continuation lower. And Q didn't take out this daily buy side. The DXY is holding support on our daily bullish fair value gap. No questions on Discord, nothing on YouTube, so we simply continue. Let's wait for the PMI news. Yeah, of course, there's nothing wrong with taking trades like this. Quick scalps, you just have to make sure you're not ending up being greedy. Looking for 10 or 50 points really. Those are scalps, scalp entries. Scalp entries don't deserve a 10-to-1 risk to reward profit target. If you do these small scalps, you enter on a fair value gap, you have your set profit target, for example 5 points, and you're out. And if you want to continue with the trend, you take another scalp entry on this bullish fair value gap, and after 5 points, you're out. We have the next opportunity. You enter right here, 5 points. Prior to the news, more risk of course, just trading with the momentum into buy side liquidity, making these higher highs and higher lows. There's nothing wrong with that at all. It's just not the way how I like to approach my funded accounts, because it's more of like I don't know, I struggled with the fact that I trade my funded accounts and I don't know what I'm gonna be doing, like, I don't know, in a couple of months. It's always, you wake up, you do your analysis, and then you trade whatever you see. I didn't like that. I wanted some more structure in my trades. I wanted to know what I'm gonna do tomorrow, what I'm gonna be looking for in the market. And for my funded accounts, I simply stick to the SilverBullet or simply the 2022 reversal model. I know that tomorrow or on Monday next week, I'm gonna be looking for a reversal at the high or low of the current daily candle into or from external liquidity back into internal liquidity. And that really helped me because I don't know, I could prepare today and on the weekend for what I'm gonna do next week instead of I don't know, just simply trusting the fact that I'm a profitable trader and then I see these opportunities and I take them as they come basically. But that's very individual. Maybe you don't have an issue with that, with not knowing what you're gonna do next week, next month, next year, which model you're looking for. If you are a true scalper by nature, be fine with that and Do whatever works best for you, really. So we keep on pushing, making these higher highs and higher lows. I really want to see what that news candle will do. NQ took that daily buy side liquidity. DXY is still playing in our bullish fair value gap. And like we said, scalp entry, bullish fair value gap. 5 points would be at 4379.5. So let's see if we would have hit a third scalping trade in a row. Stupid headset. Come on. There we go. So we have 1.5 minutes until PMI news. If we get a spike to the upside, I think we just simply gonna target the next daily buy side liquidity pool. I'm gonna get a new Apex 50k account for next week for the live stream. And then we can take small scalps like these. Don't really care too much about them. All the other funded accounts are connected with the TradeAway trade copier. So if I take a trade on one, it's going to be copied on all. And yeah, for the same reasons that I just talked about, that I want to know what I'm going to do tomorrow and prepare myself mentally for that, other than, I don't know, simply just scalping based on a gut feeling. I prefer for at least funded accounts to stick to a specific trading plan with rules and a model. And yeah, but we're going to do that next week again. Passing a Apex 50k account here on stream with scalps, with 2022 models, whatever we get, basically. All right, 5, 4, 3, 2, 1. News candle pops in. And we continue to the upside. I think we would have hit our 5-point target now. Yep, would have been the third win in a row, simply by continuing with the bullish momentum, using bullish inefficiencies for price to be delivered higher. NQ also pushed further to the upside. DXY is now breaking below our daily fair value gap. Market structure wise, this would be our market structure shift. Well, ugly market structure shift. I would like to see a nice displacement with a fair value gap to enter short on. NQ did the same thing here. Rejection wick above this daily buy side liquidity pool. The DXY is now starting to push back into the range. But what I don't like about this is if I would enter here based on a gut feeling that we continue lower, I do not really have anything to, I don't know, invalidate my trade. Yes, you could set your stop loss at the consequent encouragement of this 1 minute wick, but I don't really think that's, I don't know, it's just not my style. Trading is very individual. Some people have, or other people have different, a different risk appetite. They're more open to take trades like these. I prefer to have a fair value gap paired with my entries, because then with the precision that I expect on ES and that I only see on ES, if I see a close below the bullish fair value gap, let's say I would take a scalp like this, and I'm worried that we're gonna close below, I'm waiting because I always have to wait for the close. Wicks to the damage, and bodies told a story. Right here we saw exactly that. Wick doing the damage, taking the low out of this 1 minute candle, closed up here, and we simply continued further to the upside. And right here with the short, I do not have a fair value gap, and I will not go down to a 30 or 15 seconds time frame. I don't see much sense in that. Even though it might work out, like said, consistency is more important than anything else, really. Right, NQ dropping. I would identify this as my market structure shift here on the 1 minute time frame for a potential retracement in terms of points. Yep, it looks good. Be aware that this is counter trend trading and that's not financial advice. And I always wait for the candle close to confirm my market structure shift. Otherwise, I consider it as a liquidity sweep to simply continue up higher like we did right here. And now we likely won't leave behind a nice bearish fair value gap, so yeah, that's already out of the question for me. We have perfect equal lows on NQ here. Nope. Not yet. What I would have liked to see is this candle right here, this bearish candle, 1003, to close somewhere down here. Next candle to open up, leave a bearish inefficiency paired with this inversion, breaker block, market structure shift level for the short. We don't get that because we now don't leave behind a bearish fair value gap. We took out the next low. And now we close below our market structure shift level. But we do not have that bearish inefficiency, which is important to at least my entries. Close below. Here on NQ we would see the setup. Bearish market structure shift. Bearish fair value gap. Entry on that bearish fair value gap. Stop loss above the high. Target a 1-to-1, 2-to-1. Like this. Stop loss would be rather big above the high, but that's what I would consider protected. And then maybe a simple 1-to-1, depending on your risk appetite. $10 a.m. This is a new 1 and 4 hour candle opening here on the CME futures chart. Like I said, I'd still be waiting for the bearish fair value gap if we even get one. And of course also look at the higher time frame so we do not get lost on the lower time frames. The next 5-minute inefficiency would come in all the way down here. But unfortunately we don't get anything to enter on here on ES at least. This is the only inefficiency here on NQ. Five-minute time frame. Looks similar. 1 minute. Well, the entry only would happen for me if we retrace into that. If we simply drop with this new hourly candle and news, well, simply no entry. Good morning, Freshky. Or good afternoon. So we took some more sell side below this little swing point, but like we said, no inefficiencies. Only, theoretically inversion fair value gaps now. If we take a look at this one, inversion fair value gap, we close below, we retest it, and we continue lower. Here we close below, so this would also turn into a inversion now. I like those because previously they kept holding support to deliver into buy side. Now once we close below them, we'd like to see them to be used as resistance to deliver into all these short-term lows. Here we have a bearish fair value gap, but nah, it's too low. It's below my market structure shift level. We just took some more sell side. Don't like that. 5-minute time frame. Bullish fair value gap starting at 4369 and a quarter. We're now in this inversion. We swept this low and immediately pushed to the upside. NQ will very likely give us the fill right here. Trade over 8, nope. On NQ we would see a valid model right here at the high of the day after taking daily buy side, but only if we get the fair value gap entry. Nice rejection here on ES, opening up with a bullish volume imbalance. Let's see if we continue lower to fill this 5-minute inefficiency. Starting down here. That lines up nicely with the 1 minute. No, 5-minute is starting up here at 4369. 4369 right here. We didn't retrace into our bearish fair value gap here on NQ 1 minute time frame. Higher high, higher low, higher high. Yeah, this news candle is making it harder, but we hit the inversion fair value gap that delivered into buy side. You always find something if you want to find a reason to say, oh yeah, I entered short here based on, what is it based on? Okay, let me look. Do we have a fair value gap somewhere? Okay, no, not on the 1 minute time frame, but maybe on the seconds time frame. Okay, I'm switching down to the seconds and then it's gonna make sense. If you want to find something, you're always gonna find it. Equal lows here on ES now. La, 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 la. You're still respecting the bearish fair value gap with candle bodies. Wicks do the damage, like always. But my ideal entry would have been up here somewhere with a bearish fair value gap paired. Didn't get that. DXY is pushing back towards the liquidity void from 830. We keep on hitting the bearish fair value gap. The next obvious target would be these equal lows. Taking it step by step as price is moving potentially lower. We have our 5-minute bullish fair value gap. One, two, yeah, 5. We should see that on our chart in a couple of seconds. Starting right here, I think. So higher time frame is still being bullish. That's our 5-minute bullish fair value gap. And we're sort of struggling here. Still not worth the risk. DXY is pushing up stronger. More and more. Let's see if this bearish fair value gap keeps holding up to the level lower on a scalping account, where you take specific trades like these. I don't know, stop loss maybe 5 points. 5 points target would deliver you below the 50% of that. But you get the idea. The same way as we took the longs of each bullish fair value gap right here, continuing with the momentum. After we get our market structure shift, we would do the same thing with each and every either inversion fair value gap to the left or bearish fair value gaps that just have been left behind. So now we actually have 3 equal lows here. Just chopping, sort of consolidating here. It's 10:13. So within the next 2 minutes, we start a new 15-minute cycle. Let's check out the 15. On the 15, we can see that we have bullish fair value gap right here. So if we retrace a little bit lower, we're gonna hit a 5 and 15-minute bullish fair value gap. Really not ideal, but you're always gonna find something against a short if you're looking for it. So we took these equal lows now. We have our 5 and 15-minute bullish fair value gap overlapping on our chart. Alex, yes, I'm aware that there's a delay with my stream. Usually when I'm looking for simply just my model, I'm on a 5-minute time frame where it's not so much of an issue. But if I'm scalping live on a 1-minute time frame, yeah, the free YouTube live stream is delayed by 1 minute, and there's also ads because I'm also streaming live on Discord at the same time, where there's no delay, but that's only for accumulation zone VIP members. And yeah, you can get access to that by using the link in the description, and you land on our web page right here for the VIP membership. Then you get access to the non-delayed Discord streams. Confirmation bias, blown accounts. We hit the inefficiency one more time. Everything comes with a price in the end of the day, Alex. Nothing's really ever for free. If there is, there's always a catch with it. But it's there for free on YouTube if you want to watch it and just want to get some guidance on terms of bias, blah, blah, blah. But if you're here to copy my trades, yeah, well, that's not going to be possible. Well, very likely, at least for the 1-minute time frame, not possible with the delay on YouTube for the stream. All right, so we are now inside the 5 and 15-minute bullish fair value gap right here. After consolidating, hitting the bearish fair value gap a couple of times. Yes, would be a scalping problem. So let's say like the longs we took with the paper trading account right here, when we tap this bullish fair value gap, this one right here and this one right here, with a 1-minute delay would be hard to catch this one, because then we would already be on this candle trying to copy trade it. But yeah, like I said, if you're only here for a bias or a little bit of guidance or to ask some questions, then there really shouldn't be any issues. Okay, so we hit the 5-15-minute bullish fair value gap paired with this 1-minute bullish fair value gap, taking out one more short-term low, getting the kind of anticipated bullish reaction. And this actually is a nice example for time distortion. Right here, 10:14 is the closing price of a 5 and 15-minute candle. So right here with 10:15, what happens is we get a new 5-15-minute candle, and with that new higher time frame candle, we actually get more momentum. So right here, 10 a.m., we started that new 15-minute candle. We saw some momentum initially. 10:10, new 5-minute candle, and we really started to slow down here, sitting through time distortion, waiting for that next 15-minute opening. And what did it do? It delivered into the 5-15-minute bullish fair value gap, 1-minute bullish fair value gap, taking out one more short-term low right here. and then immediately with the momentum of that new 15-minute cycle engulf this bearish candle, kind of shifting structure here, using our bearish fair value gap that we used to deliver into these inefficiencies on the higher time frame, now maybe as support. Our old inversion fair value gap, we repriced that one, now we continue up higher. And yeah, if you're wondering why is it happening at 10:15 and not at 10:13, well, time distortion. Why do we get this bullish move to the upside with the new 15-minute candle? Because higher time frame traders come with volume. Let's see, the XY took out this buy side. Yep. It's a little high, but it's starting to retrace again. Yes, looking pretty bullish, while NQ might hit the 2022 model entry here on a 1-minute time frame. This is what it would look like on a 5-minute. Yeah, looking at market structure, just by going one time frame higher, we still see higher highs, higher lows, higher highs, higher lows, higher highs. Only if we would break basically this low, we would see a 5-minute displacement. So really for me, if you scalp the 1-minute time frame, it doesn't make sense to hope, or at least for me, that we're gonna drop below these higher time frame fair value gaps. Even on the 15-minute time frame, all we did was reprice into this 15. Of course, sometimes it does work when we really made the high of the day. Then 1-minute entry is going to offer a huge risk to reward. But I think for me, most of the time it's better if you just take quick scalps, knowing that you have higher time frame bullish fair value gaps just below you. And that's exactly what happened right here. New 15-minute candle took the short-term low, kept holding this bullish fair value gap, paired with the 5 and 15-minute bullish fair value gap, boom, move to the upside. Unfortunately, we don't have any 1-minute inefficiencies, bearish inefficiencies up here to potentially frame the short, but I think right now you'd sort of be going against order flow, which, I don't know, by the looks of it is more bullish. Now we have a bullish fair value gap here on the 1-minute, paired with a inversion fair value gap right here. We use it as support to deliver into buy side. Then we close below it, use it as resistance to continue lower into sell side. So let's see what we do right now. We have another bullish fair value gap and a new inversion down here. We tap the lowest bullish fair value gap. Usually not a good sign for the continuation for higher prices. NQ missed our entry by a couple of ticks. I don't think it's over just yet. Let's see what we do with this bullish fair value gap. 5-minute time frame. We already got a new 5-minute candle right here at 10:20. So 10:19, new 5-minute candle. The second 5-minute candle within the new 15-minute cycle. Let's see what this will do. This is our current high for the daily candle. Okay, seems like we have a 15 and 5-minute bearish fair value gap above us here. But I don't want them on my chart right now. 10:22. I'm gonna be streaming. We will see. Max would be the end of the AM session for me. I started streaming at around 8 AM. We watched the NFP news event where we framed a long of this inversion fair value gap paired with the midnight level right here. We sort of did some seek and destroy during Asia and London. Very small London range, almost smaller than the Asia session range or kill zone range, where we, let's talk about this a little bit, formed a high, a higher low, and we took the Asia buy side. After we took Asia buy side, what did we do? We displaced, forming a lower low. We pulled back into this bearish fair value gap paired with the midnight level, and we swept Asia sell side. And then we basically did exactly what we did once we swept Asia buy side. We formed a lower high in this case. On NQ we actually formed a higher high. We pulled back, failed to sweep the London sell side, displaced, holding support on our old inversion, on our old bearish fair value gap, which now has been turned into a inversion, perfectly paired with the VWAP and the midnight level to bounce with the NFP news above the previous day's high. Was pretty nice. Nothing I would take, of course, because, yeah, I don't know. Could always get that big fuck you wick below sell side and you get stopped out unnecessarily. Not worth the risk, especially on a news candle. We had the bullish SMT divergence backing up the continuation move to the upside. London buy side liquidity hasn't been hit on the S here, while NQ already hit that. But yeah, this was the London sesh at the beginning of the stream, and then we watched it continuing higher and higher and higher. Right now we're down to the 5 minute. Starting to reject. Yeah, let's see what's happening here. No bearish inefficiencies still. This would be a new inversion fair value gap now. So we close below this bullish fair value gap right here with this candle, and then every time we repriced into this initially bullish fair value gap right here, we kept on hitting a wall and continued lower, making lower lows. Now we're in this last bullish fair value gap here, and really if this fails, I would see no reason why price wouldn't continue lower to take this short-term low out here, making this just a little manipulation move to get some early shorts out of their positions before they maybe drop it lower. And Q unfortunately missed the 2022 model entry here by a few ticks. Let's see if we close below that. We close below it, yes. We open up with a bullish volume imbalance right at the low. That's when I like to give it a second chance, because yes, we close below, but we immediately open with a gap to the upside here on the 1 minute time frame. So we will see if we now use this one here as resistance as well. And just like we spoke about, low is being hit, manipulation move. What's the time? It's 10:26. So this came with a new 5 minute candle that just opened up. Now we would have a valid market structure shift on the 5 minute or break in structure. Fresh key. You're following me, you're in with me. If we get the confirmation close below, of course. We got it on the 1 minute time frame. NQ also happened to make a lower low. 1 minute bullish fair value gap. Maybe we just accelerate lower, taking out more short-term lows, or these lows right here. Yeah, pretty nice. We've been talking about the scenario here. We immediately took out the sell side liquidity without even hesitating. New 5-minute candle opened up, closed below the bullish share value gap, retested it, continued lower. I gave it a second chance because of this bullish volume imbalance. Now we keep on holding support on that lowest 1-minute bullish share value gap before we would take out the next set of higher highs and higher lows, basically. Right here, you have a 1-minute bearish fair value gap. Let's look at the 5-minute time frame. We're still inside the 5-minute bullish fair value gap right here. Taking a short, like maybe from something like this, but we see a stop loss, at least with a mini. Be too much for my liking for the Friday. But this would be a little scalp of this bearish fair value gap. If you believe that price is going to take out those short-term lows, this is what it would look like. Get an entry up here, almost 10 points. If we retrace into it, the DXY is pushing up higher. That's why we could see the continuation lower here. I would wait for that confirmation close here in 35 seconds on the 5-minute time frame. It's also the closing of a 15-minute time frame candle, and we see we're still respecting that 15-minute bullish value gap. On the 5, we're also still inside the 5-minute bullish. Let's see if we get the confirmed break of structure. Let me put the Discord on my second screen. No, we closed above. So this is not a valid market structure shift for me, on at least on a 5-minute time frame. On a 1-minute it is, and we just tapped this big bearish inefficiency. Take a look at my bento book. That's the current take profit trade of 50k account that I'm mainly trading on. And so far this week has been very well. Took 4 trades. First day was the best day so far this week, and this really helps me not trying to, or looking at this, not trying to mess it up by taking any premature trades before I see my higher time frame confirmation. Otherwise it would just be little session scalps, but I'm really not far away from passing that account, so there's no point in doing anything silly. If I would have a new Apex 50k challenge already for today's live stream, I will have one for next week to scalp again. The last one we did, we already passed that pretty quickly by just taking scalps. Right now I'm in the process of taking a few micro executions per day to make each trading day count as a trading day, to pass the minimum of 7 trading days that you have with Apex. Bearish fair value gap. Let's see what we do in this one. We have another tiny one up in here. We hit the lowest 1 minute before we take out more sell side. Yeah, let's see. 9:30 opening comes in down here. So we're almost at the low of our 9:30 opening range. Middle line, let's look at the consequent encouragement. We already happen to close above it. Let's look at it on a 5. No confirmation for me on the 5. On the 15, filled 15-minute bullish. 1 hour time frame. closed back above the 50%. Right now we're going sideways, so it's 10:30. That's a new 5-minute candle right here. So far we just went sideways during this 5-minute. Let's see. Really, I mean, just based on order flow right now, we made a higher low, lower high, lower low, lower high, lower low. We have our bearish fair value gap. That's what we would anticipate for a quick scalp of the bearish inefficiency into sell side liquidity, like we did on the way up. Now we do the exact same thing on the way down. This would be the really the first opportunity after this one right here into the short-term low. And we see once again, it seems to be playing out. Let's see if we can get past this little bullish volume imbalance and take out this short-term low and the 930 low right here. Bearish volume imbalance, that's pretty nice. Good confirmation that we will maybe remain in bearish order flow. The DXY is now pulling back again after taking out this little short-term high. $10.30, also a new 15-minute candle. 1-minute time frame. Started right here, consolidated, now taking out the next short-term low. So that would be another 5 points in our pocket. Right here, if we hit that low, and we close below our lowest 1-minute bullish fair value gap. Look how we open up here with another bearish volume imbalance. This is just another confirmation that we're still in bearish order flow for me. Let's see if we can close below it with a new tiny little 1-minute inefficiency. And yeah, that's the way I do my tape reading. If you're watching me for the first time now, taking scalps based on that is really powerful. But I set the rules for this take profit trader account, and yeah, really, if I would start breaking these rules, then I would go back to 2021 and just blow account after account eventually, because then I don't know when to stop, blah blah blah. That's not the right way. Consistency for me is more important than these quick profits. Even though I'm just sitting here watching it, we talked about longs of this bullish value gap. We talked about longs here and right here. Then we had our market structure shift. We talked about shorts from this bearish value gap into the short-term low. Right here we saw the pump. Initially we looked for longs, but we saw right away we saw, okay, bullish fair value gap at the highest being ignored. Not ideal. We really want to see that momentum continuation. We close below, we use it as resistance to deliver lower into our lowest bullish fair value gap. Close below, use it as resistance, take out the next short-term low, pull back, head inside a bearish inefficiency to take out the next short-term low right here. Now we have close below this bullish, and we would simply keep on going, making this a inversion fair value gap. And what did we just do here? Inversion fair value gap, we tap it, we make a new lower low, and here would be our 930 sell side liquidity towards the VWAP, which I would treat as my baseline. But to, yeah, I don't know, to capitalize on that tape reading. Okay, here we see already a slight divergence between ES and NQ. We see ES happen to make a lower low, while NQ is making a higher low and pushing to the upside now. Likely that DXY is not being much of a help today. But guys, I hope you see that. NQ 1034, 1027 higher lows, 1027, 1036 lower lows, and now we immediately get that push back up. Let's see if we keep on respecting the inversion fair value gap. We have another tiny small bearish one left behind right here. bullish volume imbalance. Nothing new on the Discord chat, nothing new on the YouTube chat. Take a look at NQ. NQ also broke that high, holding on this bullish value gap right here. So this is interesting, because this would be a new market structure shift long if we happen to close above it. We already invalidated the inversion. Initially, we respected it to deliver into the sell side or short-term low. We also closed above this bearish fair value gap, so we would do the same thing again, inversion fair value gap. But really, let's remove these old ones, otherwise we just have too much stuff here. Which is cool though, is this bullish fair value gap holding support right here. It's actually what kept holding resistance to deliver into this short-term low. We see that? Bullish fair value gap used as support to deliver higher, used as support to take out some short-term highs, and now we close below it. We use it as resistance to deliver into the next low. Now we close back above it, and maybe we continue using it as support. Alright, but let's clean up some gaps, otherwise everything's gonna be inside a box. Take a look at the 5-minute time frame. 5-minute time frame would have now confirmed a break of structure, and we have, let me clear all this up. We have a 5-minute bearish value gap right here. Let's see what that looks like on the 1-minute time frame. On the 1-minute time frame, that would be a 1-minute bullish market structure shift. Not really ideal, but sticking to the 5-minute here, this could be a potential entry. Let's see what the risk would look like. We have our confirmed structure shift with a fair value gap. We enter right here once we clear these highs. 7.5 points for a 10-point target. NQ pushing up higher. The DXY retracing. Let's try it. Sticking to the 5-minute model here. Sell one limit. We also close below this bullish value gap here on the 5. Let's see if we get the fill. Bearish value gap. Let's get rid of this hectic 1-minute time frame and simply stick to the 5-minute. Sorry, we have from the higher high, higher low, lower high, lower low. There comes in our break of structure. Let's mark this as a red line. Make it a little bit thicker. Close below, leave behind the inefficiency. This would be our bearish order block for the continuation lower into potential lows. Let's see. My stop loss would really go above this high. We could also use the CE of this wick, but I don't know. Stop loss would be a little bit too big for my liking. And what I usually do is the same thing that I do on the 1-minute time frame. I like to have a fair value gap as my entry, because once I see price closing above it, above this run right here, it would for me turn into a inversion where I would expect support from now, and that would invalidate my idea. That would more or less be a helpful tool to frame a long into the SPY side. NQ 5-minute time frame, hit a 5-minute bearish value gap, but without really confirming anything. The DXY Hit the 15-minute inefficiency, pushing back up. Yep. So let's wait for ES. Unfortunately, we didn't get filled on this one, but we still have this 1 minute inefficiency, and we have equal highs, so we could still get filled. We will see. I'm going to a quick bathroom break. I will be back in a couple of seconds. Let's see. Let me open up the YouTube chat. If you have any questions, feel free to ask me. That's what I'm doing the streams for. All right. Let's see. NQ rejected DXY ES 1 minute time frame. We kept holding on this 1 minute bullish value gap with the SMT divergence here. Yeah, let's see. I'm gonna leave my 5 minute limit order. Maybe we get filled. But for this finite account, I only take 2022 models for the on the 5 or 15 minute time frame. I would see one right here. Not looking for a super huge risk reward, simply a retracement into the 930 lows really. And I think it's really helpful that prior to entering into a trade, look at your account balance if you trade a challenge and then you go backwards. So if in case I lose this trade, how much would I lose? And kind of already anticipating the loss. That's really the point here. So yeah, I could enter with 2 or 3 contracts here, but already anticipating the loss, I would just simply set myself back to, I don't know, 51,500. That's not really worth it to me, being $750 away from the profit target. So working my way back. That's usually how I go about this, not being very far away from passing. DXY is continuing lower. Look at it on A5 and 1 minute time frame. We took out the high. And DXY looking kind of bearish here, but a little bit more bullish on the 5. I don't know. Let's not drive ourselves crazy here. Setup is a setup. Let me take a quick screenshot here. We got filled. Okay, let's see. Close above this bearish fair value gap is the invalidation for me. Target is going to be right at the VWAP. Like we said, we have this bullish SMT divergence. The XY is kind of trending lower. Right here, that's the bullish SMT divergence between ES and NQ. Could simply be forming a higher low here, and I get stopped out, but I'm well aware of that risk. And I'm simply playing the probabilities of this potential break of structure, bearish fair value gap, continuation lower into some sell side liquidity targets. Yeah. And if I do that 10 out of 10 times, yes, I'm gonna lose some trades, but I'm well prepared to lose the trades. This week so far has been pretty good. I saw the opportunity on Friday at the high of week, high of day. Even if I lose 250 bucks or 500 here, I'm still ending up with a profitable week. Let's see. Like, yeah, you can't expect to win 10 out of 10 trades, obviously. But you can expect a healthy ratio. 50% should be a healthy target. Risking a healthy or using a healthy risk to reward tool or risk to reward ratio, you should be on the safe side. And usually what I like to do now is really not engage with price or simply walk away from the chart. There's no point in watching it once you have set your take profit target. I like to, I don't know, forget about the trade. But we're on the stream, we can't do that. So we simply manage it, trying to stay calm. Maybe some of you took the same entry. Please be aware, there's no such thing as a 100% win rate. I take losing trades, you take losing trades, it's normal. Best trader in the world takes losing trades. The difference between the worst and best trader in the world is that the best trader in the world doesn't stop after the losing trade. The worst trader in the world would very likely say, I lost again. Okay, now it's time to gamble. And then he's pulling out or using 3 or 4 minis just to make back his loss. Ditching the strategy, taking some, I don't know, impulsive entries, blowing the account, and he's wondering, oh man, why did I do this? I should have simply stuck to my rules. Why do I write them out and put them on my whiteboard in front of me, blah, 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 trying to practice everything, but still, self-control is missing. Very simple. If you cannot control yourself, that's pretty much the difference between the best and worst trader in this world. And the worst trader would also very likely ditch the strategy after one single losing trade. It's a funny statistic if you think about it. Most of the funded accounts, or of the accounts in general in trading, are blown after a big winning streak. Not after a long losing streak. So if you're on a long losing streak, you already manage your risk very well because you do not want to run out of money. But on a big winning streak, what actually happens is that you sort of lose the connection to reality. You think like every trade you take is winning. I'm gonna add on size and I'm invincible, and boom, it hits you. You over leveraging, you're taking too many trades, whatever, after a long winning streak. Then it hits you. Like ICT Sun. You saw on Twitter how he had this very long winning streak, blah, blah, blah. ICT was very proud, like, in the top 10 of... Yeah, exactly. We've all been there. We've all been there. The difference between the good and the bad traders is, okay, after being there, are we going back there? Or are we moving on, leaving that stage behind? That comes down to every trader and the decision he's making. Take a look at NQ. NQ is also retracing, but retracing less than ES here. DXY is bouncing off the bullish value gap. That's all going in our favor, really. 930 low would come in down here. We're 5 points already in profit. Let's see how this candle is going to close. If we close below these lows, I'm likely gonna trail my stop to break even. After seeing the reaction of the order block right here, so this, like I said, before I took the trade, is framed as my bearish order block, the up-closing body candle, paired with the bearish fair value gap, paired with the break in structure. So if I already got this reaction from this area, if price is coming back up into it, there's really no point in me to hold, drawdown basically. So yeah, that's why I would move my stop loss to break even. But be aware that if you do this on an Apex account, these $325 in profit would already be now, if you lose that part of your trading threshold because it's being calculated live and not not at the end of the day. I'm able to do that because I'm trading a take profit trader account, which I'm not going to pass it on stream, I think, unless I go for 15 points profit target. I don't really do that. 15 points would be... You see, that's exactly greedy mad talking right now. I could pass this account if I hold. Should I? Shouldn't I? 15 points. That's interesting. 2-to-1 risk to reward. Okay, so we keep on continuing lower. Let's see how we close here. If we make a close below this low on the 5 minute, then I'm already moving to break even. I'm fine with that. So if anyone copied this trade, was possible even on the free live stream here, well done. Okay, so we just swept this low. Let's see if NQ did the same thing. NQ did not, so we have more bullish SMT divergence, which just helps me with my confirmation that, if we get back up into my entry area, I want to be stopped out at break even. Because right now, really, the DXY is continuing lower, which would lead to stocks going further up. We have more bullish SMT divergence, ES being the weaker pair, and we're already getting back towards our entry. So all we might have done is take out some sell side without going below the 930 low, without hitting our VWAP. Really, we could have taken some partials, but it's not possible if you use one mini contract. And we immediately get back up. Let's see. And that's exactly the reason why I'm at break even. I don't have to worry about intraday trailing drawdown. I only worry about them that on Apex. On Apex, I likely would have secured here. Got a nice reaction, but if we with SMT divergence now get back up into that, there's no point in me to take any drawdown. Trade's not over yet. We are at break even. We have nothing to lose. Nice Fade TV. Up $500. Nice. You trade with CFD firms, right? Or do you trade with Apex, Topstep, futures? In order to be up 500, you would have to use 2 mini contracts on that. Because my target was 10 points. Below the 930 low right here. Or at the 930 low. And with 1 mini contract, 10 points target would lead to a $500 profit. Let's see. Let's look at it on the 1 minute time frame. See what it looks like. On a 1 minute time frame, we swept this low right here and immediately pushed back into our 1 minute bearish fair value gap. Let's see if it holds and we continue lower from there. Otherwise, we're gonna simply get stopped out at break even. Nothing wrong with getting stopped out at break even. But well done, Fade TV. At least one of our members or upcoming members hit his take profit target on this shot. Google Chrome, Discord. Let's check out on Discord. Nothing there. We're continuing to push up higher, and I think I'm gonna get stopped out here at break even, especially with NQ not showing that weakness at all. Higher lows, DXY continuing lower. That really helps the stocks pushing up higher. Yes, being the weaker one, this would really be a good long opportunity. Of course, we could simply bump into my break even and then continue lower still, but I don't want to be involved in that. We already kind of fulfilled the objective of this bearish order block paired with the bearish fair value gap and continued lower, taking out 1 minute and yeah, the short-term low. Getting back up into it now, none of my interest, or not my interest at least. And we're stopped out at break even. Let's see if it was the right decision to make. Can see that NQ is still making higher highs and higher lows. DXY is still dropping. We hit the order block once more. So let's look at it on the 1 minute time frame. Because really what this is right here, it's seek and destroy. We form a, or we take a low, we take the highs, we take the lows, we go back to taking the highs. Not really what you would like to see being in that short. Unfortunate, but oh wait, did my trade away take profit on my Apex funded account get hit? I had a partial on my funded at this low. Yeah, should have been hit. Let me check. Yep, nice. So at least secure a partial on the trade away. Apex funded, nice. We got paid. So what's the time? It is 11. So this is a new hourly candle. We have SMT divergence. We see that the XY is continuing lower. This is all bullish for the S&P, while NQ didn't form these lower lows. NQ respected this bullish fair value gap a little bit better. We really wanted it to see, yeah, to continue a little bit lower, at least to the 9:30 low of the regular trading hours. We didn't get that, but we made sure we protect ourselves from potentially, yeah, taking a 7.5 point loss. It still could play out, don't get me wrong, if you're still in a trade and you don't like break-even trades. But for me, it's just not worth the risk. Sitting through a potential seek and destroy. Here on the 5 minute, we see it as well. We take lows, we take highs, we take lows, we take out the highs. We'll see. And since it's 11 AM, that's going to be the end of today's live stream. NQ just would have hit our 1 minute bearish fair value gap for the 2022 model right here, and it's now starting to reject. Took out the high. ES is rejecting as well, but I'm not interested anymore. I already tried it. I give it 1 shot per session, and that's gonna be it. All right, guys, that's gonna conclude the live streams for this week. I hope you enjoyed them. I'm gonna be back next week. Nice, very well done, Fate TV. Took 2 contracts, take profit for 360. For 360.